Welcome to a new season of Market Makers IL, where we pivot slightly and do a deep dive into the world of private banking. We're going to tell you why, we're going to tell you how, we're going to tell you the details of some of the products. We think you're going to learn a lot, we're going to have a lot of fun, and we hope you do too.
And still, no suits, no ties, and we'll leave no question unasked.
And we'll be talking about conversations that talk about shekels.
And some dollars.
And no investment advice. We're back with another episode. In our first episode of the season, we talked about EFG's global outlook. And now I want to ask a couple of questions because I think where we are right now is, if you look at theme 10, what was theme 10? Actually, theme 9 also, but let's just look at theme 10.
IPOs, M&A.
What does IPOs and M&A mean to us with our limited look at the world? It means we're minting new millionaires. They're going to be people in Israel who have their first exposure to money. Because I think one of the interesting things about Israel is, for a lot of people who exit, this is still the case, where they did not grow up with anything, and we're really talking about success stories. We're talking about entrepreneurs who have an exit, and it's their first time meeting with a significant sum of money. And so what I think would be interesting for us to do right now would be to talk a little bit about why we believe that some of these people who now have a substantial amount of wealth should be talking to us. And so the first question for you, Michael, is why Swiss banking?
Great introduction. Thank you, Joseph. Well, first of all, I would say that, as you mentioned, we'll see a lot more exits going forward. And first of all, I'd like to give some perspective that the first exit is now happening when the entrepreneurs are younger. You know, before or many years ago, people were working their whole life and then exiting through an IPO at age 50, 60, whatever. Now at age 30, you've got new millionaires, and that's only their first exit, and then we'll have more. So when you get to...
Yeah. Here's the funny thing, though. I want to jump in for just 1 second because I heard something really funny. Somebody said, is somebody going to tell... Somebody should tweet the following to Asaf Rappaport from Wiz and ask him if he's still on his parents' cell phone plan. Because as you know, in Israel, 30-year-olds are very often still on their parents' cell phone plan. So when do you get off of your parents' cell phone plan after your first exit?
That makes sense. So then all of a sudden you've got millions of dollars in your bank account, and then we start talking about Swiss banking. So getting back to your question, why Swiss banking? So there's a few things here that are worth mentioning. So first of all, Switzerland is well known for its stability and reputation for banking. Switzerland is a stable country. For many years, it's been a neutral country, and it's been accumulating this, which is the second point, this expertise in wealth management. There is an unlimited number of bankers, advisors, assistant bankers. You know, this is a whole ecosystem, and people have been we've seen a growth in expertise in all kinds of products across the wealth management spectrum. Today also Switzerland, although it's a relatively small country, manages, I've heard, a fourth of the global private wealth outside of Switzerland, which is actually a huge amount of money. So that links to the first 2 points. Switzerland has also been adapting to new norms and regulations. And for example, when you used to talk about banking secrecy.
I was going to ask you this question because I think people used to go to Switzerland with a very different mindset than what you're about to tell me.
This is no longer the case. There's no longer banking secrecy. There is what we call an automatic exchange of information. So when you open an account, you sign this AEI form, automatic exchange of information, which is basically saying there's no more banking secrecy in Switzerland, in theory. And that is a positive point because it reassures a lot of potential clients also. Obviously now the geopolitical environment has been quite volatile, I would say, globally. And that's not the case in Switzerland, which is also quite of a positive point for a lot of people considering, where, to place their millions of dollars they just raised. And also there's another point that may or may not speak to some people, but in terms of diversification and innovation with all of the impact investing, ESG strategies, as we mentioned in another podcast, that Switzerland is the first one in the world for innovation. I mean, it's also one of the most developed countries with impact investment strategies in portfolios. So a lot of people are also very interested in that. So overall, I would say Switzerland is the key place for private banking because of its local stability, its reputation, its hundreds of years of expertise, and I would say also transparency and innovation.
And what about that Swiss franc?
Swiss franc is strong, my friend. But Swiss
Yeah, we're not
franc
going to
is
talk
called-
about currency right
Yeah.
now, but you got to keep looking at that one.
Yes.
So that's great. So, okay, now you've told me what's great about Switzerland, but I'm sitting here in Tel Aviv. I just bought an apartment for myself, bought an apartment for my parents, bought an apartment if I've got a couple of kids, bought the first Porsche, which is almost as expensive as an apartment in Israel. Now, what do I do with the rest of my money? Why shouldn't an Israeli be thinking about Swiss banking? What's wrong with the local market? We're not
There's
wrong, but
nothing
what's
wrong.
different?
I would say there's nothing wrong with the local market, but for a certain population of millionaires, the key word is diversification. And a lot of people want to diversify their investments, but also their bank exposure. So obviously you need your local bank in Israel for your day-to-day life and for some good investments as well, obviously, especially in shekels. But when you're a millionaire, you also have dollars most of the time. And you also want to diversify your banking exposure. Therefore, you put your money in an international bank and very often in a Swiss bank. And why Swiss banking in Israel? Because it's quite convenient. You have representations of those banks locally in Israel. I mean, we at EFG, we sit here on Rothschild Boulevard. We have a local team. We're licensed and we provide a personalized service in Hebrew, bringing Switzerland to Israel with our own expertise, with our own very high level of service, which is, which is a human service. I mean, we can meet the client at their place, in our office, in a coffee, bring an investment proposal and talk about global investments in Israel, in Hebrew. And that is very, very convenient for a lot of people.
Yeah, I want to stress, we're doing this in English. Michael could do this in French, but we actually do speak Hebrew, so don't let our accents fool you. You come to our offices, and we will speak to you in your native tongue. So I think that that's important. The other thing is, when you think about this, it's very easy when you're in the headlines because Israel is blessed with a lot of different business publications, and so some of them focus on individuals and not business news. And so a lot of these people who have an exit, their names get published. And I am sure they are getting tons of phone calls, which leads you to the opportunity, I think, to make mistakes. What kind of mistakes do you think should be avoided when you're thinking about new investments with your first experience handling significant sums of money?
I was once in a meeting with an entrepreneur, with a young entrepreneur who has made a lot of money, and said, "Look, I mean, your proposal is interesting, but I think I'm just going to do it exactly the same as my friend who also made a lot of money. Why don't I put everything on crypto?" He was serious.
Well, if you bought it at 4,000,
he was serious. So here you kind of like break all the rules of diversification, of long-term investments, and all this. So I think the first mistake for those people is the lack of diversification. The first mistake is the lack of knowledge about what's out there in terms of investments. And this is what we're here for. We spend a lot of time with new entrepreneurs, new millionaires, explaining them, how to build a diversified portfolio for medium term, long term, short term, whatever is their need is, and not do like the basic mistakes of they've worked hard and then burning half of their wealth in a stupid trade.
So I think, when I think about that, because I agree with you, I think it's a question of humility. And what do I mean by humility? There's two aspects to that. One is, I think, in life, we know the VC stats. 1 in 10, maybe 2 in 10, really knock it out of the park and are very, very successful. So you can spend your career in startups and not have a big exit. That's the first thing. And so I think if you have been blessed with success, a lot of times you should be thinking, I should protect this wealth. This may not happen again. And that instinct that I'm just going to pile it right back into risky assets is one I think that is an easy mistake to make, especially when everybody on the block is doing it. And so I think that that's one side of the humility. The second part of the humility is something that I fell into this trap myself as an ex-engineer. And that is, you have an expertise in one thing does not mean you have an expertise in everything. And so I think there are fields of expertise. I used to do this as a research analyst. I used to think, well, what are these investment bankers bringing to the table? And then I spent a little bit of time in investment banking, and now I've been in private banking. And you realize totally different skill set, totally different goals, totally different kinds of people are successful in doing these kinds of things. And so I think, to me, the humility there is to say, listen, I know a whole lot about large language models. I had to throw AI in there. I
don't know what that is.
I had to throw AI into the mix. Yeah. But I don't know much about finance. And I think that the humility to say, I'm going to go to an expert and I'm going to learn about finance is the first step in terms of preserving wealth for the long term, which I think is our main goal with our clients.
Exactly. I mean, everybody wants to present the wealth. Everybody wants to make money, obviously, to grow this wealth. Everybody has some numbers in mind. And we're here to kind of like help them in this journey. We see some entrepreneurs who made huge exit and they've been literally diving into the financial knowledge. They've tried to learn so much about investments, and that makes our meetings, super interesting because we have a conversation with somebody who, like a year ago, didn't know anything about structured products, investment, private markets, and all of a sudden we're building a portfolio together. Some other people have no clue, and they just like rely on us. So it's our role to kind of understand the needs. But there is also a balance between preservation, because it's easy to preserve capital if you put everything in a deposit or in a low risk investment. But at the same time, client wants to make some money, because otherwise, what are we doing here? So this is finding this right balance between risk and return, and we have the right tools to do it in order to kind of like meet those expectations on the client side, whatever their knowledge is about investments.
So we say Swiss banking. But people have banks. There are 4 big banks in Israel. What is the difference between a retail bank in Israel and when we say Swiss banking? What should you be thinking about and what should you not be thinking about when you're thinking about Swiss banking?
So bank is a very broad word. And the main difference between retail banking and private banking, I would make it simple. If you go to a cashier and go withdraw money with your credit card, I mean, that's retail banking, when you have
so there are no ATMs on our floor.
We don't have any ATMs, and that's mostly because we are a private bank, meaning that we provide investment services to our clients. Our clients can have credit card, but we don't have ATMs. We don't have a cashier. You can go, cash a check. That's not what a private bank does. Some of them do, but because they have a retail bank as well. But private bank, pure private bank, it's not that. Not to confuse that some retail bank have also private banking services for the more wealthy clients, which is also the case in local bank in Israel. So this is where the confusion can come from. I hope I made it clear. So for us, EFG, private banking, no cashier. You cannot cash a check at our offices. You cannot come and withdraw cash with your credit card at our ATMs. That's us. That's private bank. You come to us to get some investment advice. Retail bank, you do what I just said before.
All right. Well, you talked about investment advice. And, I've been in this field for a long time, and people have this thing called their asset allocation model.
Yes.
So investment advice, let's start a little bit on that. Somebody comes into the office and says, okay, I trust you, and you've just told me I'm going to give you investment advice. What advice do you give?
What advice do I give? So first of all, there's a process. First of all, we go through, and because of our licensing requirements, we have to go through a questionnaire to determine the risk profile of the client. So first of all, we go through all of those questions to make sure, okay, what kind of profile this client has. Not only in this specific portfolio we'll have with us, but overall. And those questions are like, do you understand the markets? What is volatility for you? What is your, how, for example, a quick drop in the financial markets or in investment portfolio value, how will it impact your standard of living? All the kind of questions.
Not to interrupt you there, but Tell us a quick story there. I think a lot of times, and this is really important, there's a real difference between filling out that questionnaire and what happens in real life. And we're not going to tell the full story, but I think that there's a lot there when you try and tell somebody what your real risk profile is. Be honest with yourself.
Sure. I mean, exactly. Look, I had a client once who told me, no problem if there is a quick fall in the market, 20% drop, that wouldn't impact my standard of living. And all of a sudden, I remember a year ago there was a volatility in the market, and he put $10 million in a 1-year deposit. And obviously he made 5%, but obviously the market went up much more. So that's a lost opportunity for him, and that was like very emotional move from him, which is also when he filled in that questionnaire, that felt slightly different. So this is the kind of things we need to bear in mind. And then to go back to your questions, what kind of advice do I give? So then once we have filled in that questionnaire, once we understand what is the risk profile of our client, then we build together the portfolio. And it's usually a diversified portfolio, including all sorts of instruments. Those instruments can be, very basic stocks, bonds, ETFs, mutual funds, structured products, alternative investments, and we can talk about, what those things mean. But this is also always in accordance with the client's knowledge, understanding, and willingness to invest in those investments. So once we build this portfolio in line with the risk profile, then we talk about it with the client. And most of the time, there is a bit of a dialogue between, this I like, this I don't like. Very often, we have clients who said, I remember what happened in 2008. I don't want to do this or that product. And some others have, can have like short memory and don't mind and then go ahead. So we have to adapt to the client's, needs and how they feel with their money eventually.
So what you're saying is, and I think this is true, and I would think that this is part of our brand, private banking is private, and that means it's an individualized, custom-made solution.
Absolutely.
That depends on every single aspect in the person. Because I think, and we don't talk about this a lot, I joke about this because as an ex-engineer and a business school guy, I took a grand total of 0 courses in my entire academic career in psychology. And yet, I think if we underestimate the role of psychology in money, we are doing ourselves a great disservice. And so there's a lot of emotional attachment to what's going on here. And I think part of our job, part of your job, is to, in real time, recognize the emotion, but try and remove it from a decision. Because we're not trying to make money tomorrow. We are not in the market of buying a dip, buying one-day S&P options to make the year. We're in the business of preserving capital for the long term, for the most part. We'll let our clients take risks when they want, but we're not in the business of quick gains. And so I think that that's a really important part of it, is using emotions in the right way as part of your investment process.
Exactly. I mean, we have to read the client's mind a little bit. We have to understand where they stand. So I may have a very strong conviction, but if the client has a strong know about a certain product, I will not insist, despite the fact that I have a strong conviction about it, and I think it's a great opportunity right now in the market. Sometimes, we being proactive, sometimes we have to listen to the client as well, because we want the client to sleep well at night. It is very, very important. That psychological part that you mentioned is definitely a key part of our day-to-day job.
What do you do when you think a client's made a mistake?
When I think he made a mistake, I just tell him I think he made a mistake.
Do you get blamed afterwards?
Usually, even if the trade was the client's own decision, the client would often blame the banker.
What do you do when you make a mistake?
When I make a mistake, I take full responsibility and I call the client. I let the client know. I don't hide. You never hide from the client, because eventually he will know. So never hide. I mean, take the hit straight away. Tell the client, escalate. We raise the issue. We fix the issue as quickly as possible.
We haven't really talked about our bank. So we've talked about Swiss banking. We've talked about the difference between a retail bank and a Swiss bank. Why EFG?
I love this question. and this is the reason why I joined EFG as well. I usually kind of like summarize it in like four different, with four different areas. First of all, the bank itself ticks, all the boxes for clients to sleep well at night, in my view. It's a listed bank, regulated in Switzerland, with great parameters, with a strong capital ratio, which is basically how healthy your balance sheet is. It's got a strong rating. It's rated A. It is also a bank that has been growing significantly, overperforming on every single target they've set, and we can see that very easily on how the share price has grown over the last few years. So from that perspective, we could use the word solid, in my view. That's one thing.
And I would just jump in there and say, for those of you really interested, we just put out a new 3-year global strategic plan, and I think it emphasizes a lot of the points that Michael made, and we are on track to continue that kind of deliverable for our customers.
Exactly. That was published together with the 10-month results, which were also at record profits. So it actually feels great to work for a group that is breaking its own records and growing. So that's one thing. The other thing is the size of the bank. We're talking about more than 3,000 employees. We're not talking about tens of thousands of employees. Yet we are located in about 40 countries across the globe. And that is, in my view, a very interesting proportion, because we are relatively large, also, top 5 in terms of assets under management. If you look at in Swiss private banking, if you look at this figure itself, so it's relatively big when you think about there's probably 100 banks, in Switzerland, and yet with a very flat structure, meaning that in terms of client experience, the bank is very agile. The bank is actually pretty efficient in terms of decision making, in terms of pushing, making things, making progress on different cases, on the client requests, things like that. This is very efficient because of the size, because of the structure of the bank. In my view, that is very very interesting. I would say the third aspect is the platform itself. Investment offering is, I've worked at several big banks, and the investment offering is actually very solid, very wide. There is, I would say, the menu. If you go to a restaurant, you see a lot of good things in the menu, and you don't miss anything. So that's, in my view, also a key part, because any millionaire needs to have the full spectrum of investment products, and that we do have it as well. And the fourth thing, in my view, it's really people. And that's probably the most important thing. I mean, there is here the people on the ground in Israel or in Switzerland are, from what I've seen, I've been almost 20 years in working in capital markets. I think we're dealing with very high quality people, dedicated to their clients, and very, very hungry to succeed. And that's also part of the model at EFG. And you will see a lot of people with very high longevity in the bank. The turnover in that bank is, people are staying in the bank. People are sticking to the bank because the model is done in such a way that people are incentivized to be here for the long term, which is great for the client, because clients' bankers are not changing every year, which you may see in other banks where turnover is more volatile, in my view. So to summarize, solid bank, structure and agility, strong platform, and fantastic people.
I'm going to summarize this really quickly. I think what we are offering, and this is, I think, really important for Israel, which is still relatively small when it comes to number of people, we're a global boutique. We are
That's
the
right.
right size for the right size client, for the right size in this market, and I think it's a really interesting intersection for us to be sitting at, especially as we move into this world of increased capital markets activity, which should be very good for the local business people. And so I think that that's great. And I think when you mention people, listen, Michael won't say it about himself, but if you ask me what our brand is locally, what we are doing is bringing people content. Our last episode was about the global top 10 themes for 2026. There's more of that to come. Every time we have a view on the market, we come to people with that. We come with proactive trading ideas. I think that that's really important. And we are bringing the local client Switzerland. And so all of the advantages that you've mentioned when you talked about Swiss banking, all the portfolio, all the positives in terms of the menu and the quality and the kinds of products you can use and the kind of advice you can get, we're bringing to the local market. And I think one thing I would highlight is just last week, we had our global head of sales and distribution in Israel on a panel, and one of the things he talked about was resilience in portfolios. And I think we should talk about that for a minute as well, which is, okay, markets at an all-time high. We're going into 2026. What do you think we should be doing?
Well, I think there's two ways to look at it. I think, first of all, I mean, everybody is obviously afraid of that correction that may or may not happen. As you mentioned, portfolio have been doing very well. What we're doing with clients is we do some kind of like shift in portfolios to shift into a more, I would say, protected portfolio, and we have tools to do that. Not be afraid to take some profits in some position, yet keeping exposure for potential upside in the market, and we've been actually quite active doing this. However, we also keep in mind for most of our clients the long-term, I would say, target. The long-term target eventually, if there is a correction next year, we don't believe it would be necessarily like in a dramatic way. It is yet, however, possible. And therefore, we have tools to kind of like hedge the portfolios, hedge the equity exposure. We have instruments with, I would say, a lower correlation to the market. And this whole diversification is the key to navigate a potential correction in 2026, yet benefiting for a potential upside that would continue in the markets if things go well.
I think we've talked about a lot of different topics here, and we've thrown out a couple of financial terms. And one of the things I would stress is, if you're listening to this, don't worry. We're going to come back and we're going to do deep dives on all of these individual sorts of products that we've been talking about. So when we say structured product, don't worry. We're going to tell you what that is. We're going to give you examples. We're going to tell you what we mean when we say hedge. We're going to tell you what we mean when we say leverage. We're going to come back and we're going to do little bits of 101s on all of these different topics, because I think there's a lot to talk here. There's a lot to uncover, and there's a lot of things that we should be explaining to people to understand, because one of the things that's most important, I think it comes back to the first question of why we're here, what Swiss banking does, is there's never a time when we want a client of ours to be invested in something that they do not fully understand.
Exactly. That's absolutely right. First of all, we need to understand it as bankers. If you as banker don't
I was assuming that was true.
What do you sell? Then we have a problem. No, but it's we're it's. I like our team to actually understand in full what we are advising to our clients, and sometimes just like look at the key facts, but you don't really understand what's inside. So this is, first of all, the starting point. We need to fully understand what we are suggesting to our clients. When it's a fund, what the fund does, who is the manager, what's the track record, what's in there. So then the client needs to understand it. Once this is the case, then we feel comfortable, then the client will feel more comfortable investing. I've been in situations where we explaining the product in a very simple way, and the client still, it doesn't speak to him. So fine, we won't do it. I'm telling very often the client, if you don't feel 100% comfortable, if you don't 100% understand the product, that's fine. We'll do something else.
I think that's a really important point here. And so I think if I were to summarize where we've come, what we've talked about right now in Swiss Banking 101, because we're going to come back to this, it's a unique product in a environment which is uniquely set up to benefit customers, clients, and the banking experience, to preserve wealth for the long term. And used properly, it's a very efficient way or effective way to diversify and to plan for the long run when it comes to capital protection, capital growth, and your financial future.
Exactly. Very well summarized.